What's going on, guys? Yesterday I talked about Forex day trading. Now I want to go towards more swing trading, and we're getting closer and closer to my style where I've moved away from scalping. I started as a day trader, then I went into scalping, then I went into swing trading, and then eventually my style warped towards investing and researching stocks and building micro portfolios and growing my wealth this way, and taking once in a while a few opportunities that are completely asymmetric, and I can make lots of money in a short period of time without risking a lot, without leverage even sometimes. But I still think that the the best way to trade forex is with swing trading. That's my opinion. It depends on the traders, but um, there was a forex broker that disclosed that the most money their traders make are the ones that are long term and that hold positions for weeks and months. So now I want to touch on this, and I want to explain to you why I think it's the best way to trade. So this was the pattern we were looking at yesterday, but if you zoom out, if you go to, let's say we go on a 4-hour chart, then the situation is a bit different. Now what we're seeing is a very aggressive downside. And if we go on a weekly, now we see that last week closed with a lot of rejection. This is a strong, let me just remove this. This candle is a strong rejection candle, and it does happen that the market will go back to highs and then go back on the downside. But usually when you have a weekly candle like this, like the bigger the time frame, the more candlestick candles are meaningful, in my opinion. So in my experience anyway. So here what we have is a downtrend. Now we have strong rejection. So I would expect that we would see some type of downtrend from here. To where, I don't know. We're gonna figure this out as we go, but to me this is an opportunity to make a lot of pips, and when you look at these small, you can spend a lot of time trying to day trade and figure out what's going to happen in the next hour. But the more you get on a smaller time frame, the more randomness you get and the more manipulation from the prices. But when you zoom out and you look at these larger time frames, like this is very bearish. You see a bearish engulfing pattern of that. You have rejection. You have a strong black candle over here. And the US Canadian was weaker than the rest of the, when we looked at this, when we were looking at the 1-hour chart here. We had this pattern. And the US Canadian was even weaker. It went lower on the look here. It's even weaker. So we have weakness on the US Canadian, and if we zoom out, we have a big rejection candle. So these are the type of trades that I'm looking at, that I look for. Where if ever I'm able to establish a position, and if I can sit on my hands for a couple of weeks and see if that level gets broken to the downside after a little bit of wiggling, then I could be in for a very strong move. And these are the types of trades that I'm looking for pyramiding. And pyramiding, in my opinion, is the best way to build an account. And it's the hardest part of trading, I think. I think it's very difficult to achieve live, but when you do it, it's really rewarding. You can really boost an account size very fast, and that's what I aim for. So sure, day trading, scalping, it's cool and all, but in my opinion, the easiest as far as time spent, because when you do swing trades, you're really not all day in front of the computer. In fact, I recommend not being in front of the computer because it gives you you're removed from your emotions, and if you look at your screen every hour, every minute, sometimes your mind plays tricks on you. So when I see something like this, I see strong rejection on the weekly. We're Sunday night. We're just starting the week, and if I go look at the 4 hour, I see a strong downtrend with this structure here that broke down. So it would be sort of a neckline in a distribution pattern. And now the question is, will we go here fast? So what I would try to do in these cases is I would go on a small time frame, and I would wait for a strong retracement like this, these retracements here. And I would try to short somewhere along here. This would be my ideal shorting zone. Put it in red. So this would be ideal for me to try to short, and I would place my stop. I would look for a structure. Like this would be my my resistance, basically. And if this gets broken, like it's possible that the price will go as far as here. But I think my my stop will be somewhere along here, and anywhere in that zone here would be shortable. This would be the ideal point where I would short. And if I'm able to establish a position, then I would place my stop and I would wait for price to go in my direction. And then I would just, as the price breaks this low here, then I would protect my stop and let the trade do its thing. And if you get good at this, then you're gonna have, like, your equity is gonna swing a lot, because you're gonna be able to establish positions that are very very big, because you keep protecting the next entry. That you enter another trade and you treat it independently. It has to be valid on its own. You don't just cost average because you already have a position. You have to wait for a proper setup on a smaller time frame in the same direction of your main position. And then you keep doing these trades and you protect your entries from day to day and from week to week. And you accumulate big positions and you sit on your hands. And that is the hardest part of trading. And if you want to make a lot of money, that's how you do it, in my opinion.